Good afternoon, everyone. Welcome to the London Property Podcast again. We've got a new location. I'm with Chris and Jaffa again. And obviously from the last vlog and podcast, we've had the budget, which was last Wednesday. Lots to talk about. We'll try and condense it. Obviously, the main thing is that the stamp duty holiday has been extended, has been tapered off. So until the 31st of June, it's up to the 500k mark, and then obviously it goes down to 250, and then it goes back to the original 125k in September, right? So what do you guys think of this? Positive news, what we expected?
I think, we all expected it, didn't we? I think, I think it's positive news. I think we were just talking before that, create that buzz feeling or carry on for a little bit longer. But you guys are on the ground, so
I think it's good that he's tapered it down rather than just extended it. Everyone was talking about that cliff edge. So for the fact that he's used a taper, it's a pretty kind of standard thing, but nobody kind of realised that that's what he was going to do. I think the budget in general was pretty positive.
Definitely.
Barely any kind of tax increases really, apart from corporation tax. But I think even though that's quite fair. So it's kind of a policy of, spend now and then tax later. Everyone's kind of safe at the moment. And with regards to what is done for stamp, I think it's unbelievable in terms of the genius move that is pulled is the backing the 95% loan to value.
Yeah,
that's definitely.
I think that's a really good. What do you guys think about that?
Yeah,
I think it's very positive, but then again, it's one of those markets where it probably wouldn't affect us being in prime central London so much. What can you really buy for 600k?
Yeah,
which is where the limit is. But very positive. I thought when it came to the budget, I was expecting a lot more harsh taxation.
Some kind of wealth tax or something.
Exactly. There was a lot of
gains.
Some of our investors put off their investments waiting for the wealth, potentially a wealth tax to come in.
Yeah.
So from that side of things, when it finished, we were like, oh, that's it. So it wasn't as anywhere near as harsh as what we thought it was going to be. I'm extremely positive. Obviously we'll touch on the corporation tax implications afterwards, but very positive. Happy with the stamp duty extension.
I think it just brings that that cliff edge that everyone was talking about, conveyancers, surveyors, everyone, estate agents. We're not going to have that. We've got an end in sight. There's plenty of time for people to really crack on, even up until June, right? So the reality is it's a smart move in that sense, rather than saying, well, it'll be extended for 6 weeks and then that's it. I think we were kind of expecting it for it to be phased out gradually rather than completely cut it off.
I think what's clever about it as well, the 95% kind of loan to value backing by the government, a lot of lenders are now going to kind of push these, and from what I understand, speaking to a couple of clients who work for banks, they've got a lot of money to lend, and they're being encouraged to lend. I'm not sure if they're loosening their policies to any degree. I have been told on the grapevine that they are, but got no kind of factual data on that. But I think when it does taper out and it kind of finishes the stamp duty holiday, this 95% backing by the government for loan to values, it's going to be, I think it's going to be for a year. I had it written down, but it's not phasing out this year. It's for a year. I think it's finishing in September 2022. And my opinion is that's going to stimulate the market kind of probably even more so than the stamp duty cut. So I think I've explained to a couple of colleagues who are looking to buy, I think it's a really good time to get in as soon as possible.
Definitely.
At the very bottom end of the market.
Yeah, absolutely.
Because like the help to buy, when that was first introduced, if you didn't get in kind of straight away, you left it for 6 months, all the prices have been pushed up. So I think it's going to put a complete floor on the bottom of the market.
Definitely.
Which means prices which we were seeing kind of reductions at a higher level, I think it kind of closes the rungs of the ladder a little bit close together and makes it a bit easier for the first time buyers to then kind of reach the next rung of the ladder, because there's not the support at the higher level, like we said, above 600,000. So I think it's a really positive step. Doesn't really affect us that much because we don't really sell a huge amount of properties below 600,000 really. But all in all, really positive news.
I totally agree.
It's definitely going to create continued activity we've experienced in the last couple of months, and for the bottom end of the market, absolutely. I think we've in Maida Vale and Little Venice, we don't have a lot of properties at that price point, like 500, 600k, but inquiries just dried out for the last 3 months, and I think buyers realized we're not really going to catch the stamp duty. So I think a lot of people are waiting to see what happens with the budget. And then obviously now people are actually, we've started to see just literally Friday and this morning we've seen more inquiries coming for the lower end stuff. So you can see people thinking, actually now I can confidently look for a property and hope to exchange and complete. So all in all, a very positive budget. And obviously the corporation tax, Jaffa, you were going to touch on it. So how does that affect you deal with the investors and the developers? How do you think that's going to play out?
Obviously, I mean, from our perspective, we were expecting that there was going to be some kind of a shift on corporation tax. So it didn't come out of the blue. So that's really important. There has been a movement. Obviously, the corporation tax is going up from 19% to 25%, and that's going to be implemented from April 2023.
Yeah.
Nothing much I can say. We were expecting it to happen. I don't think it's a huge increase. It's something that a lot of people expected would happen. Something we can always factor into our proposals. Again,
there's a caveat on that, right? You don't pay isn't it still 90% for profits under
50,000?
Yes,
so smaller landlords and investors, obviously, if they're not making, if they've got properties in SPVs and they're not making 50k profit or just under, then they won't still be paying 19%. So that's
I think
important.
for buy-to-let landlords, it doesn't really affect you, affect them so much. I think from our side, obviously from a property investment perspective, it will probably straight away affect us immediately. But it's like I said, it wasn't a huge increase. We were, for us, we expected it completely. So
Well,
and it's still, aren't we still the lowest rate in the G7? Is that right?
Still quite competitive when you look at other countries. And one thing to note, obviously, there hasn't been any pause to the overseas 2% additional stamp duty, which is going to come into effect as of 1st of April. Obviously, nothing that's been left untouched yet. Even with that coming into play, we're still buying in London. It's still cheaper than New York and other places where you're looking at up to like 25%. I know Hong Kong is at 25%. Are you looking at something crazy like that?
There is an overseas tax, and it is ginormous.
So London is still incredible value, and I think, look, as we'll do these podcasts, I think if we're going to look back in somewhere and think, it's exactly how we thought it would pan out, because the international market are really, really keen. And you've obviously, you speak with these guys abroad pretty much on a daily basis, and you know exactly that they're keen to get back into London. It's good value. It's incredible value to invest now. So even with that 2%, I think there's going to be a huge demand from the international market, certainly in prime central London. For sure. That's where they like buying. So quite a positive budget,
and I think a good way to raise revenue as well, right? Because like the majority of the properties in the UK, I think the average house price is something below, or maybe this is at least London, below 600,000. So it pretty much captures 95% of the marketplace. And the fact, I mean, if the Chancellor did raise income tax, for example, and he raised it by, I don't know, a couple of pence, how much is that going to bring in versus what they've done? I don't know. I don't know what the figures are. But I think when you're talking about big chunks of stamp duty at a time, and it's thousands of pounds per transaction, even though they're lower end transactions, when people kind of, the government backed kind of loan, I think is going to create massive turnover in the marketplace. I think it's going to, the tax receipts are going to be incredibly lifted with the stamp duty. So I think it's an incredible way of boosting the property market. But at the same time, I think it's almost quite dangerous, really, because when it runs out,
that becomes like a cliff edge.
Then it's like, what are they going to do then? Are they going to taper that down, or but we'll worry about that in a year or so's time.
I think the other thing I was going to say is the nice thing with the budget was also, they increased corporation tax, but they didn't make it an imminent increase. So it wasn't like overnight that it would go up. You gave us 2 years to kind of factor that into our plans. And at the same time, one thing that no one seems to mention is that he didn't do anything with regards to personal taxation. So that all stayed the same. So from that perspective,
they even increased the personal allowance line,
right?
And then froze it until 2026.
Exactly. So from that perspective, everyone should be quite relieved that that stayed the same as well. So,
no, very happy. I was quite
Exactly.
negative going into the budget.
I was very pessimistic going into the budget, but
I was like, oh my god, it's Wednesday.
Yes.
This is going to be awful. It's going to be
Yeah.
the worst budget we've ever seen.
Yeah.
And then I came out of it. I was like, what?
Yes.
There wasn't
wasn't
really
so
that
painful.
much.
The money
there.
tree appeared again.
Yeah,
wasn't
the
it?
magic
It's like,
money
where's
tree.
this money?
Yeah.
Keep on shaking it.
Furlough's been extended as well. We're
Furlough's
going to touch
extended,
on
yeah.
that, which is again crazy because it's been extended 3 times now.
Yeah.
It's the 3rd time, right?
Yeah.
I'm pretty sure.
I think one thing that a lot of people are worried about is, look, once furlough ends, once the stamp duty holiday ends, once all these things that everyone obviously says propping up the property market, what's going to happen after that? That's something we're going to always have to keep pushing back because we don't know what's going to happen.
We don't know.
But the reality is, the government's doing everything it possibly can.
I think so. And the guidance as well on that is, like we've seen, they're tapering it off slowly.
Yes.
And they're mindful that the cliff edge is something that's pretty important that could damage the economy. And the way that I see it, if the government want to back all of these mortgages, then they're not really going to want the property market or people to start defaulting, are they? Do you know what I mean? Because they're going in big with this bet.
Yeah.
So I think it should give people a bit of confidence that we're maybe not going to see the types of gains that we had like throughout the 90s kind of thing. Well, for sure we're not, but like in terms of stability, these measures are really supportive of the market.
Yeah. I think the Office of National Statistics, they've also revised their outlook after the budget on 2 points. One, they initially thought house prices would go down by, I think it was around 5% or something, minor. They've basically said that they're not going to fall now, they're going to stay static, which is very interesting because it kind of ties in with a lot of research that I've read back in like November, December, where they were saying actually, especially in prime central London, everything's been factored in, so it will stay steady or incrementally like go up like around 2% over the next 5 years. So the fact that they're also acknowledging, one, house prices are not going to decline, and the second thing is how quickly the economy is scheduled to recover, because initially it was something, I think now they're looking at maybe early 2022 where the economy is going to be back at COVID levels, which is quite incredible, because I remember last year, there was talks about it will take 15 years, 20 years for the economy to get back to 2019 levels. So again, that's quite important because they're doing all these things and they're very strategic in the timings of they're not just thrown out there. So
so furlough being extended, obviously I think that's positive, isn't it, guys?
Absolutely.
It's positive,
Definitely.
even though it's been tapered down. And with regards to the, anybody thinking about the negatives of unemployment rate going up and everything like that, they're forgetting they overlook the savings rates, massively increased recently. And I think kind of coming out of this, I think a lot of people will have a decent amount of disposable income. Not to forget that there will be some people who fall on harsh times, but we need to look at the positives of that and just bear that in mind coming out of this.
So there's a lot of factors which obviously drive consumer confidence, and obviously the extension of furlough, the outlook which has been revised for the economy. We're expecting to be back at 2019 levels in 2022, which is insane to think about. And obviously the house market, forecasts, I think the Office of National Statistics initially thought that the house market is going to shrink by 5% this year. They've revised that and they're saying there's not going to be a contraction anymore. It's going to stay pretty steady, which again is super positive. So all these elements that we've had in the budget is going to create, confidence. People will go out shopping more. They've got more savings, as Chris mentioned. Yes, there'll be, people affected by it, but the overwhelming majority are going to be in a decent position.
They've got more leverage. 95%.
I think a lot of a lot of people were waiting for the budget to come out. I think pre-budget, everyone was holding on. I mean, from my side of things, from the development side, we were finding there wasn't much out there in terms of stock. And I'm sure now, I don't know, post, coming up to the budget,
it'll come
back.
back.
Absolutely. More stock, more, obviously buyers are already out there ready to buy stuff. So I think it's going to be a really, really positive year, based on what happened last year and based on this budget, which is super positive. And, yes, you can look at how negative things are, but equally, and let's not forget about the jab rate, guys, right? I have to mention that, we're still top in the world rankings when it comes to vaccination. So that again will create confidence that retailers need, the housing market needs,
the pound needs.
The pound
kind of gone through the roof recently.
So all in all, if you put all these positive things together, it looks like it's going to be a really good 2021 for London property market. So we're very positive.
Returning back to some kind of stability.
Yeah.
And I think the more that things go on, I know I don't want to get political about this, but I mean, the way that I see things, it's relatively stable for the kind of crisis that we've been through.
For sure.
Like in terms of the property market, I'm talking about. You know, not other industries. So I think that the government have done pretty much as good a job as they possibly can.
Definitely.
Yeah, absolutely. So definitely a positive budget with lots of things to talk about. We'll be back in about 2 weeks' time with obviously more news, and we'll see how things have actually unfolded on the ground after 2 weeks with the budget. And we look forward to seeing you. If you have any other questions, by all means, please contact us. Otherwise, you'll find us on YouTube, Spotify, and Apple Podcast. And we'll see you guys soon. Bye.